What's good, everybody? So I'm pretty much going to be breaking down how I did make $22,000 within a span of, I believe, a week just trading the S&P 500 index. Now, for those of you that saw my Instagram post, I'll probably put like a little snippet of it here on the screen, or maybe like play the actual video itself. Of course, so March 27th, and notice there's no end date. On a challenge account and a verification account, you're gonna have an end date, right? This is one of my many funded accounts. This account in specific, like I said, is for the signal group, right? So I call the trades on the signals on this account, right? So notice I also have a profit split. So my profit split on this account is gonna be on the April 27th of this month. Obviously, it's in a 100K account, right? First things first, this is today's profit. So I'm gonna go to right click, custom period, click here, right? Nothing's changed, right? It's still the same, right? And then if we head over to my metrics here, today's profit, $10,000, matches up perfectly. Along with that, I'm actually gonna show you how much profit I've made for the month of April so far. So let's go to custom period. I started trading April 3rd, right? So there's been about 5 trading days. Let's just leave it at 5 trading days so far in the month of April, right? So let's go here to April 3rd. So for April, I have made a total of $21,763. So I've made $21,700 in 5 days, right? On my FTMO funded account, which again, I kind of showed you. Here is my 10K day, right? It's a combination of these trades that I took on the S&P 500, which as you can see here, here's 2 positions that I entered along. You can see kind of it right there. So 1 lot, 1.50 lot, and here's another position I entered there, which you could see that right here, 1 lot, 1.50 lot, and then the 0.80 lot. So here's my 10K day. And again, you can see today's profit, 10K day there. Now, like I said again, I've made $21,000 in 5 days so far, and this is only the first week of April. So I'm gonna show you over here that it correlates. So anyways, April 3rd, right, is when I started trading. Let's go over the days. So these are gonna be a combination of all the trades I've taken on those days. And notice how it says here profit, right? So that's gonna be there. Anyways, that would be a profit challenge event, and then there'd be a little past here for the challenge account. But anyways, gonna get into it. So April 3rd, right? So it's gonna be from the 3rd to the 7th, right? Made $7,000, lost 4,000, made 8,000, and obviously made $10,000 here. So pretty clean. Nothing really to go on there. So you guys can verify all this. Again, this is on my FTMO funded account. But pretty much that is my FTMO funded account. So it is a live account, it is real money, and I do keep 70% of that profit. I'm gonna pretty much break down my methodology and pretty much the whole idea behind that trading setup. Now, it is my favorite setup to trade when it comes to most currency pairs. That is my go-to setup. That is the setup that I've been trading with for a couple of years now. So I'm pretty much just gonna break it down. I did make 22%. Now, typically with my trading plan, I typically like to risk around 2% per trade. But now the thing with the FTMO account is, since I do have a maximum daily loss of $5,000 or 5%, I cannot surpass that, and my account currently is sitting at around $127,000. So it's a little bit more than the actual video itself. So 2% of around $127,000 is around roughly $2,500 to $2,600. So I can't really risk 2%. I'm pretty much just risking $2,000 per trade, which is relatively very small to my account. Now, typically when it comes to actually me risking 2%, I'm typically looking to gain at least 2 to 3 times my risk at minimum. So the idea behind risk to reward ratios, for those of you that are a little bit newer into Forex, with my account, it's roughly at around $127,000, right? I'm gonna be risking $2,000 every single trade, right? So this is my initial risk. One thing that's predetermined when you're trading, right, is how much you're gonna lose, because you never know how much you're gonna make. So I predetermined, okay, on this trade, I'm gonna lose a maximum of $2,000 for a potential, notice how I said potential because I never really know, for a potential $4,000 plus gain. Right, so now let's kind of go over the ideology and the methodology of the actual trading system that I do like to trade, that I also do teach in my student group as well. Now, I did make, I believe it was maybe 15% in the span of 2 days just by catching these two moves alone, right? So pretty much when it comes down to actually looking at the market, one thing that I do like to do is always follow a top-down approach. So I'll use the daily and 4-hour time frame for overall direction. Now when I'm talking about the daily time frame, all I'm simply looking at here is the candlesticks and how these candlesticks are forming. Clearly there's more momentum to the upside with how big these candlesticks actually are, and I'm going to kind of not go everything into too much detail, but I'm just gonna kind of simplify it, right? So if we notice, there's a lot of momentum to the upside right now, and price is actually making higher highs here on the daily time frame along with higher lows, but we don't see all that information here on the daily time frame. So this is why we follow a multiple time frame analysis approach here. So on the 4-hour time frame, we could see things a little bit more clear here. Notice how price was kind of forming higher highs and higher lows here. Right, so we had this more or less double top pattern, then we had the break of structure where price did form a lower low at this point in time. Price decided to kind of consolidate there before forming higher highs yet again, which the break of structure, typically when you see a break of structure on the 4-hour time frame, always consolidate with the daily, right? And then at that point in time, you'll see that that was just an average pullback. Plus everything with the coronavirus going on, there's been a lot of bad news, but at the same time, there's been a lot of good news, like the death rate has definitely dropped. A couple things like that. I'm not really big into fundamentals. I'm starting to incorporate fundamentals a little bit more into my everyday trading, but that's something I'm just going to get better with over time. But anyways, so clearly price had broken above these highs, and this is where I ended up taking the trades. I'm not a breakout trader. Like I said, I'm a retest type of guy, if that's how you want to put it at. But anyways, so I like to use support and resistance as well, along with my moving averages, right? If my moving averages are crossed blue over red, that's telling me that typically there's more buying volume than selling volume, right? So I'm going to typically mainly look to buy, right? Especially that price had gave us a new higher high here, right? Clearly this is a higher high because price obviously met a higher price than our previous high, right? This would be our legitimate higher high because price gave us a pullback, but we're not looking that far into the future yet, right? So the whole idea behind support and resistance, right? So if we look at this level here, right? Let's look at this level, right? Here you can clearly identify that there is a level of support because price had rejected that specific level where we saw pullback, right? Once price actually broke under that level of support, all I wait for is to see if that level of support becomes a level of resistance, right? So as you can see, it did in this case here. Now, the whole idea behind support and resistance trading is at one point in time, there was buying pressure in this zone, which caused price to go up and reject, right? I don't like to say that there's more buyers than sellers because that information isn't accurate. For every buyer, you need a seller. So the way I like to look at it is by buying and selling pressure. So at one point in time, there was buying pressure in this zone, right? Once price actually broke through, sellers broke through this level, right? I wanted to see if sellers can test this level again and hold this previous level of support that buyers had held, right, as a level of resistance, and see if sellers can hold that for a possible trade opportunity, right? So that's exactly what happened over here twice, right? So how I like to trade this setup is once price has broken a level that in this case sellers hold, notice that there was selling pressure here twice, right, in the form of a double top. Put this here, right? Buyers broke through this level with this candlestick. So what I waited for in an intraday move was on the 30-minute time frame, right? I mark off my zone. First of all, I'm kind of skipping that. I mark off my zone, so I kind of find like an average here. Once my zone is marked off, I go down to a 30-minute time frame, right? And in the video I posted on my IGTV, so if you go over to my Instagram page, I'm probably just going to insert the clip at the beginning of the video. You'll see that I actually did take these trades on my funded account. So the entry technique here was after this variation pattern here. This is a price action signal that I also teach in my course. You have, you know, your single formations, which we'll get into that after, and you have your multiple candlestick formations, right? What this multiple candlestick formation tells me, this multiple candlestick price action signal is, one, we're in my zone, and two, buyers are now holding this previous level of resistance as a level of support. So the entry technique was pretty simple. Notice how price closed above the high of our previous wick. That shows us that price is forming higher highs. So we're forming higher highs at a previous level of support or resistance that was broken and now has become a level of support. So before I even took the trade, I identified, okay, where are my stops going? I typically already have my rules for this specific setup, right? My stops always go under the zone, under the lowest point that price rejected. So in this case, my stop loss has to go under this wick. I like to put it, you know, a little bit farther apart just in case, right? And then my targets, okay, you know, where are my targets going? I decided to target the nearest level of support and resistance, which, as you can see, the nearest level of support was right here. So I marked off my zone based off of the 4-hour time frame right here, and said, okay, you know, I want to target that level there in specific because price has a higher probability of reaching that level than any other level, right? So I'm being realistic with my targets. I'm not, you know, shooting for the moon and looking for a 10-to-1 risk reward ratio trade. You know, I'm setting my targets based off of structure and support and resistance, where price is most likely to go to next. Again, trading is all a game about probabilities, right? You're never always going to win every single trade. This is why we have to manage our risk. So I took about a 2% position here. So I had a minus $2,000 risk on this trade, right, for a potential, right, for a potential 1-to-4 risk to reward ratio. Now I did get out at the very top because I was trailing my stops. So once price actually did come up here and I saw this M15 pin bar, that's when I decided to get out. So this was my exit here, M15 pin bar at the level of resistance at my targets. Could I have possibly squeezed out a little bit more? Yeah, but I didn't, you know. So after that, you know, pretty much price just went in my favor immediately. I got out right here and there, right? So pretty great trade, followed the plan, nothing really different. Let me get rid of this. Now, why did I decide to go long in that zone again, right? Simple, going back to the 4-hour time frame. I do use Fibonacci as well in my trading methodology for those of you who maybe just stumbled upon this YouTube video, right? So I like to put my fibs from the lowest point prices move to the highest point, right? So this would be our higher low, this would be our higher high point, right? And price came back to this 38.20. Now the way I like to trade as well is I like to add multiple confluences together to increase the probability of the trade. So I'll only take a position when price is pretty much, or when I have pretty much 3 confluences. So what are my confluences for this trade? One, we're at a previous level of support and resistance that buyers had previously held. 2, we have a 38.20 retracement on Fibonacci. 3, we have this bullish engulfing candlestick on the 4-hour time frame. 4, we have the cross moving averages being blue over red. So I have 4 confluences on this position. Now, that being a high probable setup, all I'm going to do is just manage my risk accordingly, right? So on this position, I ended up gaining a little, it was a little bit more than 3 times my risk. Obviously, you know, if you're risking 2%, you're going to gain around 6.5% on average. Now, with this position, I did decide to risk a little bit more. After that engulfing candlestick on the 4-hour time frame, all I did was wait for the pullback. So pretty much, as long as price didn't close under my level of support here, the trade was valid. So I went long. I had 3 positions to go long. 1 position to go long was here. Stop loss was down here. Second position to go long, and I'm using the same target, by the way, same target up here. Now my target's actually a little bit different. My target is actually the high of the actual level itself right here, right? As you can see, that was hit after a few hours, right? So my second entry was after this variation pattern with this stop loss. So this one position is giving me 4 times my risk. This other position is giving me 3 times my risk here. Now you're asking, if you only risk 2% per position, what was your risk on this specific move? My risk on this trade was only 3%. I had to risk 2% on this position and 1% on this position here, right? Once price actually broke above this level of resistance, again, same break and retest setup. The only thing that's changing right now is the time frame, right? Price broke above this level of resistance here, right? That sellers held at one point in time. As you can see, buyers did break through this level here as well, but sellers brought it right back down to this overall level of support down here, right? So at this point in time, I ended up moving my stop losses to break even once buyers broke above this level of resistance, right? So my stop losses were at break even, and I almost did get stopped out on all of my positions here. My entry was here, and my stop loss was actually where my very first entry was here, and I had the same target. So I'm technically risking nothing on this trade on this position, right? And I decided to risk another 2% on this position right here, which gave me about 4 times my risk, which then in turn, obviously price went in my direction. Once price was up here, I decided to move this stop loss to break even and actually start trailing my stops. So then at one point in time, I had moved my stop loss to under this 15-minute low, because if price violated this low, the likelihood of price to continue to go down was higher than it would continue to go up, right? Especially after price had kind of made this higher high right here, right? Which I'm talking about this one. So pretty simple, pretty standard setup. That's pretty much how I made, realistically 20% in about roughly a couple of days. Again, you can look at the video, all the statistics are there. It is on a live account, and I will be showing the withdrawal on my Instagram page when my profit split does come on the 27th. This would be the 3rd profit split I received from FTMO. So on that specific portfolio, by the way, because I have different portfolios, one for gold, and this one is specifically for US 30 and the S&P 500. Even though I do take trades on gold on this account here and there as well, but that's how I pretty much caught that move as well. So I'm not going to go over any of the other positions that I caught, like this break and retest here, or this break and retest I actually did miss out on. I did get stopped out on this position here. So, it is what it is. Currently up around 24% so far for the month of April. Again, I'm only risking 2% per position. So, when price is in a nice trending condition, you could definitely make way more money than prices when price is obviously just kind of consolidating there. So that was pretty much it. Again, if you're someone that likes things to be a little bit simpler, I go over that in my course as well. Now, I'm not just trying to sell you my course, but this is just kind of just different techniques. Some people may be, your entries are too complicated. I also go over in my course, if you're more of a simple guy and you want to keep things as simple as possible, which I like to personally keep things as simple as possible, but I also like to kind of read price and kind of tell me what price is actually, or trying to read what price is actually trying to tell me. Again, that's really all I do, is kind of just read what price is trying to tell me. That's our job as traders, is to kind of read what price is going to tell us. So I like to identify what the market is doing, then I like to predict what it's kind of do next. Again, I don't really like to use the word predict too much, but that's kind of what I'm doing. I'm trying to predict what price is going to do next. Then I create a structured plan for that specific setup, and then obviously I execute that structured plan, and I follow that on a day-to-day basis. Now, this is just a very simple video explaining how I did make $22,000 within the last couple of days trading the S&P market. But anyways, if you're someone that likes to take things a little bit simpler, all you can do is just enter off of this price action signal here. Your stop loss would have to be somewhere under this low, right? And then your targets, this target right here wouldn't have given you the best risk to reward ratio, but typically the bigger the risk to reward ratio you have on every individual trade. So if you're someone that likes to have a risk to reward ratio of a 4-to-1, or a 1-to-4, 1-to-5, right, then you're going to lose more trades. Your win rate is going to take a hit, but that's fine because that's compensated by the really high risk to reward ratio. If you're someone that wants to win more trades more often, then typically more than not, you're going to be trading with a lower of a risk to reward ratio, right? I'm yet to see a profitable trader that wins, 70% of the time, that each trade, you know, is a 1 to 5, you know what I mean? Typically when you see a profitable trader and they have a 1 to 5 risk reward ratio on average, then they probably win 30 to 40% of the time, right? And that's just from everything I've experienced over the last couple of years trading. So like I said again, if you're someone that likes to simplify things, you could have entered based off this engulfing after rejection of this level of support. Because there is buying pressure in this area, buyers are holding this level, stops under the level of support or the newfound support, and your targets could have been this -27 extension level up here, right? You could have done that, look for an extension higher, which would have given you almost 3 times your risk. So, you know, I'm going to try and do more free content like this, and I will speak to everybody in the future videos. Again, if you want to see the full breakdown of this trade on my FTMO funded account, on the FTMO 100K funded account, just look at my IG video. I probably already inserted the clip in the video itself, but, you know, just take a quick look at that. So I will talk to everybody in the near future.